Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The silver outlook is currently holding above that $16 handle with the support seen at $15.95. Although the market did take a very heavy blow to the downside, as like did gold, I do expect to see a recovery from $15.95 and look towards $16.35 and on towards $16.55. That being said though, I am a little bit cautious of that call due to the fact is I would like to see the technical implications to turn and maybe from a break of $16.35 would start shaping up to a potential bull move and look towards $16.55 and reassess from there. Beneath $15.95 would give some concerns and could actually see a fall towards the region of 15.5 to 15.70. But at this stage, I do expect to see this level hold if challenged today. At this present stage, looking at gold, it is making a challenge to take on that minor resistance seen at 12.26 and looking further towards this level of 12.30 to 33. It should be noted though, if a break above there would give further implications towards the upside, but the market would still need to clear the next level, which could be a little bit tougher, which comes in at 12.38 to 39, and reassess from there. But let's see how the market plays first of all towards that level of 12.30, 33, and if we do get a break, it should give further implications and see the rally on towards that trend line. Any weakness returning, I do expect to see demand coming from 20, but also a base now forming from 12.15. Well, an interesting price action in the Australian dollar over the last 24 hours. Yesterday, first of all, we saw a slightly firmer upbeat Australian retail sales number, which exceeded expectations from 0.2 and came in at 0.6. And then we had the RBA at 2.30. The Reserve Bank kept interest rates unchanged and preserved the record low cash rate at 1.5%. However, the released statement after the decision offered no hint of its bias, although the market was expecting a possible hawkish statement, especially after the former RBA board member last week, John Edwards, commented that the RBA's future course could hike rates something like 8 quarter percentage point tightenings towards the period of 2018 and 2019. However, the disappointment for the market bulls, the Australian dollar took a heavy blow to the downside and plummeted from a high of 76.80 and exceeded its downside target of 76.15 to record a fresh low of 75.90. At this stage, I do expect to see further weakness coming through. First of all, we've got a stochastic that's given us a negative crossover, but I would like to see the MACD histogram go through 0 to get the next move down. The immediate support is seen at 75.70, and if we go through that level, then I do expect to see all the indicators supporting a further move in a southward fashion and look towards 75.45 to 50 and then reassess from there. Any advances should find resistance on the day at 76.25 and firmer above at 76.75. Well, the US overnight takes a breather as the market closes in observance of Independence Day. The market for the euro, however, did take a little bit of a dip to the downside, however finding support in front of 113.25. On the day, I expect to see that level eventually give way and look towards the support of 112.90.95, and it is viewed beneath there would give the next open fall to 112.20.25 where this firm uptrend comes in, as you can see here. One thing to note is that we don't have the technical implications to support a further move down at this stage in terms of reaching the 112.20 target. But that being said, the US has got a lot of work to do on the top side, and if that continues, then yes, I do expect to see 112.90 break. So do be a little bit cautious if you are short, in case we get a rebound from this level, because we could look back up towards 113.75 as minor and firmer above 114.0520. Well, since the bull run in dollar yen, it now seems to be finding a short-term cap at 113.60. And from the given price action in the last 12 to 24 hours, the market is a little bit softer for the start of today. We've seen a low so far at 12 112.88, right in front of that support at 112.70.80 where I've highlighted here. It is viewed though, if we get a break there, then we could see further weakness in the next few hours and look towards 111.80 to 112.10, which I now view as a base and potentially a buy zone. The reason behind that is the fact that the market, although is in overbought condition, if it does fall towards that level of 111.80 to 112.10, it would ease it out of an overbought condition and eventually see a move up towards 113.60 towards 114.30.45. And to wrap up with sterling, with the recent comments from the Bank of England MPC members, it was Michael Saunders' turn overnight, where he gave an interview with the UK newspaper The Guardian to explain why he voted for a rate rise. He thinks that the household should prepare for interest rates to go higher at some point, and if rates do go up, it will be in the next context of the economy doing okay and unemployment being low and probably falling, which will not constrain for any adjusting interest rates during the Brexit period. However, we still need to see what Mark Carney, the Bank of England governor, has to say, who recently voiced his concerns about the Brexit's negative difficulties. However, since his comments last week, he's still strongly against a rate increase. So, how do we look at the market now for the sterling? I still feel that the bears will continue to pressure the downside, although we don't have the technical implications like the euro. The sterling is the same way, so we still need further support to give the bear call towards 128.60. However, a break of 129.10 would give that view, and I expect to see further weakness. Any advances on the day should find a cap around 129.85 and firmer above at 130.45. So that wraps up my daily video. Thank you very much for joining me. I hope you have a great day ahead.